The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Hello traders, this is your Options News Rundown for March 1st. First up today is a story from Reuters. Donald Trump announced today that he would impose tariffs of 25% on imported steel and 10% on aluminum in a move that the administration said would protect U.S. industry, but which critics said would fail to boost jobs and risked stoking a trade war with China. Trump, speaking after a meeting with U.S. steel and aluminum makers, said that the duties would be formally announced next week. News of the tariffs drove stocks of domestic steel and aluminum makers sharply higher, but it also hit sentiment on Wall Street due to the potential impact of higher costs on consumers. The move, which came after one person with direct knowledge of the discussions, described as a night of, quote, chaos in the White House due to frequent switching of positions in the administration, was sharply criticized by some senior Republican legislators. From trade wars to bidding wars, it looks like Comcast's proposal to buy Sky plc for $31 billion has raised the specter of a potential bidding war between Rupert Murdoch's 21st Century Fox and Walt Disney Company. Comcast, the owner of NBC, MSNBC, and Universal Pictures, said on Tuesday that it proposed to offer £12.50 per share for Britain's Sky, more than the $10.75 that Fox had agreed to pay for it. Murdoch's Fox agreed to buy the 61% stake of Sky it did not already own in a cash deal in 2016, but the takeover has been held up by regulators over concerns that the media tycoon wields too much influence in Britain. In December, Disney agreed to buy a number of Fox assets, including Fox's stake in Sky, in a separate $52 billion deal. The next likely step is that Comcast will make a firm offer, which would require the company to have its funding in place. Fox could then return with a higher offer. And finally, U.S. consumer prices increased in January, with the gauge of underlying inflation posting its largest gain in 12 months, bolstering views that price pressures will accelerate this year. Those expectations were underscored by other data on Thursday, showing that the number of Americans filing for unemployment benefits fell last week to a 48-year low as the labor market tightens. Another survey showed prices paid by manufacturers for its raw materials hit a more than 6-year high in February. The combination of rising inflation and robust labor market could force the Fed to raise interest rates a bit more aggressively this year than currently anticipated, as it worries about the economy overheating. The U.S. Central Bank has forecast 3 rate hikes in 2019. The first rate increase is expected later this month. The U.S. Commerce Department said consumer prices, as measured by the Personal Consumption Expenditures Price Index, rose 0.4%. This was the biggest increase since September and followed a 0.1% gain in December. The annual increase, however, was unchanged at 1.7% in January because of the unfavorable base effects. Excluding the volatile food and energy components, the PCE price index advanced 0.3% in January, the largest gain since January 2017. The so-called core PCE price index rose 0.2% in December. Base effects also kept the annual increase on the core index unchanged at 1.5%. That is all the news we have for today. You can find all of these stories and more on theoptionsinsider.com, and Dan will be back tomorrow with more options news you can use.
The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.